All right. Okay. Good morning, everybody. Thanks very much for tuning in and spending your morning with us. I think we've got a good show. It's it's really interesting taking a look and seeing how things are going. Actually, real quick, let's just do an audio check. Want to make sure that this is coming through. It's really interesting. Yep. So we're good to go. And I'll pop out the chat so I can see any messages come through. Okay. So the market took for me what I think is an unexpected downturn. Um, Now we've been obviously remaining objective. We've been, mapping out saying that this definitely could be the case. But when we're looking at this here, let me back up because I'm looking at the 15-minute candles. Let's go to the 1 hour candle. Okay. We have we had two channels here that intersected. Let me get off of, there we go. Okay. And we basically hit the intersection. We came down, we had a wick, we hit this intersection, we got a little bit of a move. I mean, like 2.5%. And then we came back down to this ascending parallel channel, this blue one here. And so I thought, all right, this is going to be interesting. We got to see where are we going. If we hit the top or if we hit the bottom of this and get resistance, then we're probably moving back upwards. We can take a look and see. And we lost that level. It didn't give us any support, rather not resistance, but support, meaning like a floor, right? So we hit that. We broke straight through the floor, and I thought, okay, well then let's see how it responds to the bottom line of this parallel descending channel. And we hit it and we went through it and it gave us a little bit more support, but ultimately we lost it completely. And I was thinking, wow, that's amazing. And we kind of got a bounce off of like 2580, which was that point of control that we had been talking about. And it was like, wow, just not too much support at all. It was a pretty ferocious dump. And really we haven't recovered much. Now things could recover, who knows? But for anyone that was aware of our paper trade, we had our stop loss at $2,400. We're currently sitting at $2,400, meaning our trade got stopped out. We lost that trade. Now, this is the purpose of today's call, right, and broadcast is losing a trade. You're going to lose trades. It's gonna happen, and every trade you take can end in a loss. I feel like we had a lot of reasons to take this long, and we did. I mean, realistically, we did. Um, and what you have to do is you map it out. You say, all right, is this the most probable scenario? Is this the most likely scenario? And then you put in the trade and you let it play out, right? You let it play out. And honestly, $2,400 sitting down here, it's like, yeah, I mean, I put 2,400 because I thought if we hit this, that means that I'm wrong. And clearly I was wrong on this because we didn't get a bounce at 2650, which was approximately our average buy-in after we had our three levels hit. I mean, we started buying in about 2730, and then we bought in at 2680, I think it was, and then we bought in at 2604, right? And we didn't really get much play at all from these levels. So yeah, I mean, it was just we took the trade. We had plenty of reasons to do it, and I thought the probability was in our favor. But that's where it comes down to. It doesn't matter. The market's going to do what it's going to do, right? So you can see where we did get every one of those levels that we mapped out. We got some support. there were other investors sitting there going, okay, I see this, right? But for whatever reason, whether bigger traders or just the market sentiment or whatever it is, right? We could not prevail. And that's okay because we have risk management. Listen, if we're taking trades that are a risk ratio of at least, and we don't compromise on this, at least 1 to 3, meaning whatever we're going to lose, we would triple if we won. Okay, so if you're risking $100 on your trade, if you win, you're at least getting 300. Okay, so 3 to 1. As well as not risking more than 1% of your portfolio. With these two things combined, okay, meaning if you lose a trade, so if you are risking $100, that means your portfolio is $10,000, right? That's what your total portfolio is $10,000, and we can risk 1% of that if we lose. That doesn't mean we're only trading with 1%. We've got some formulas and some stuff like that help you determine how much you can actually put on a trade. But with those two factors together, you only need to win 3 out of 10 trades to actually remain profitable. Now, you're not very profitable, right? But you are profitable at that point. So I see a comment here. I'm going to actually put this up on the screen. So next stop, 2,900. Let's and you're talking about Bitcoin. So let's go to Bitcoin and see where Bitcoin is coming, or rather where Bitcoin is going. Wow. Okay, so Bitcoin cleared levels that I didn't see. Okay, so here we go. So with Bitcoin took out some significant levels. As a matter of fact, Ethereum was much, oh, 24. Okay, 24. I see. Okay, he's asking about Ethereum. That's fine. But actually, look at this. So Bitcoin. So with Ethereum, we're actually still right around here. Like we lost this clump, and we came down, but we actually haven't taken out this low. So the low that we're at with Ethereum relative to Bitcoin, if we were to kind of like match these charts up, we're actually still up here. So Ethereum's holding a lot better than Bitcoin is. Bitcoin's way low. Bitcoin took out this low, meaning the yearly low. I did not realize that because I haven't looked at the Bitcoin chart until right now. So here, let's put this up. Okay, so sorry, 2,400. This is significant. We're gonna have to go through and chart Bitcoin and see about that, because Bitcoin is low. All right, let's go to the daily chart for Bitcoin real quick, and then we'll go back to Ethereum. I mean, we're currently where Bitcoin is right now is the yearly low because we are we're not on a wick right now. We're not on a getting a support pump right now. We are at the low. All right, so let me make sure we're not on log. Let's see. I'm gonna spread this out a little bit so I can get the bottom of this candle. There it is. Okay, and we take it to the top. Okay, so for Bitcoin, 29,911. As we just continue to dump for Bitcoin. So this golden pocket, it's basically 26,000 to 30,000 for Bitcoin. This is the golden pocket. We also have a big monthly level right here that's lining up perfectly. So for those two reasons alone, I would be looking at some support in here right around 30,000. We've got to come back and look at Bitcoin. But let me go to Ethereum. That is crazy. I did not realize because we don't have that same type of dump on Ethereum. So here's Ethereum. So you see what I'm saying? We're still up here. Bitcoin's down here relative to these other lows. So Ethereum's holding much better than Bitcoin. So yeah, could you explain how exactly is ETH related to Bitcoin? It's a great question. So they're not, I mean, they're related in that they're crypto assets and they're two of the biggest crypto assets. So often they trend together, right? It's very rare to see Bitcoin go down while Ethereum is going up. Typically what we see is kind of like the relationship with gold and silver, right? Is that they move together, and if one goes more, then the other one will kind of catch up, or if vice versa type of thing. So they typically track together, but it's just a question of magnitude, right? How similar. I mean, Bitcoin might move 10%, Ethereum might move 20% or might move 5%, right? So, but they're typically going in the same direction. They're tracking together. So that's what we're looking at here when it comes to Ethereum and Bitcoin. So obviously they're two completely separate assets, but they're within the same kind of field, obviously, right? It's the two largest crypto assets. Same if you were looking at like commodities, like gold and silver. Those would be the some of the largest commodities when it comes to like precious metals and stuff like that. So all right, so we're taking a look here. All right, so here, let's map this out. And by the way, when we've got these channels, we don't want to delete these channels. So what we want to do, we want to create a folder. We're going to move this. So we're going to move this other channel into here, and we're going to rename this. We're going to say old. Old parallel channels. Okay, and they're moved together. We're going to keep these channels on here. They're going to come into play, right? This blue channel is not going to be doing much for us right now, but if we ever come back up, of course we will, right? But if we come back up, we would want to be looking and realizing that there's still this channel here, that there's this trend line, okay? So we don't want to delete this channel. We're just moving it to a folder where it's less relevant for the time being. Same here, right? We're going to come back up and hit this eventually, right? So this could be resistance, this could be resistance, and this could be resistance, right? Likewise, if we come back up, right, and come back down, maybe this is support, and then we can find support and move on up. Who knows? But yeah, so you don't want to delete your old channels. You just want to kind of push them off to the side. So we are doing a redraw, and we are taking a look at the market with fresh eyes. With fresh eyes. So we lost this low. Okay, we lost this low. That means that the idea of higher low, higher high, higher low, higher high, to me, that is no longer the likely scenario, right? I think we can all agree upon that, especially if we are this close. I mean, we're $78 currently, or $70 from taking out this low. Pretty likely scenario. So I'm now looking at a range, a horizontal range. Okay, so I'm going to put on. So let's see. Let's first put on our. Okay, so there's a monthly level. Beautiful. Put on our weekly levels. Okay. All right, let's put on our daily levels. Got a lot more daily levels. Okay. So we're just above a daily at like 23, 26, somewhere in there, maybe 23, 22. We've got some good play from this before. Matter of fact, 1, 2, 3, 4, 5. It's almost a weekly, this one here, but it's a good level. So we could maybe see some support off of that, but I don't think that's the most likely scenario. By the way, if you're on Twitter, obviously feel free to listen to the audio, but if you want to view the screen and see it for yourself and see us map this out, there's two links. One link allows you to join in, and you can view the sorry, one link allows you to join in and ask questions, and we can have a chat about it. The other one is just to watch the YouTube channel and view it that way. All right, so we've got some levels of support down here. This is really what I'm looking at. I'm thinking that this range, first off, I really like that monthly level. I think that would be a great swing failure pattern because people are feeling really, really bearish. So you could get a lot of people wrecked, a lot of people liquidated, and probably get a big position filled. So all right, the question is thanks for the explanation. Do you think it's a good strategy to leave the majority of our bag in stables for now? So I'm not going to give financial advice. I don't want to tell you what to do with your money. I'm not a financial advisor by any means. So I don't want to tell you what to do with your money. I will tell you what I'm doing with my money. I'm looking for opportunities to get into Ethereum. And as far as spot, so there's two things that I'm doing here. I'm doing day trading, where I'm actually using leverage and I'm trying to, increase my position by using smaller money and stuff like that, right? Which we lost. We lost our last trade. We got stopped out. The other thing is I'm buying Ethereum on spot, right? Anything under $2,500 for me is like an Ethereum. I'm like, this is a great opportunity, and I will be buying into that, right? So I wouldn't say, like, it really depends on your situation, depends on where you're at. But for me, this is the point where I start transitioning from stable tokens to Ethereum and to Bitcoin, because the value is so, I mean, it's getting low. 2,500 is kind of that number for me, and we just blew right past it. So yeah, so that would be that would be my response. Obviously, I'm not telling you what to do with your money. I appreciate the question, but for me, this is a good value. Anything under $2,500 for Ethereum to me is a good value. All right, we're looking at this horizontal range, and I think it's somewhere in here. Okay, so I'm no longer saying that we are trending upwards. What I'm thinking is that we are in this range. Okay, and eventually we will break up and we will go up, or we will break down. That's the range that we're in right now. Now we could break this and take out this low, and who knows, right? So we don't necessarily have to continue to oscillate and ping pong between these two levels. We could actually, hold on one second, because I need to get my trade set up here, because I'm actually planning on, so don't take this trade. I'm not doing this so you'll take this trade. So agree, but this could still not be the bottom. True. Absolutely true. Look, so the comment is that this could still not be the bottom, and you're not wrong, right? When we're trading, we've got to remain objective that anything could happen, right? It was very likely that we were going to get a bounce around $2,600, and that the trade that we entered was going to be good. We didn't get it. We lost that trade. Excuse me. That's okay. All right, that happens, right? The market, we're not saying we can predict the market. What we're saying is we can find groups of investors and try to trade with them, and together we can turn the market around and find bottoms, find highs, right, and make money that way. But that doesn't always work. It doesn't always happen, right? So all right, two things I'm looking at real quick, and I want to get this mapped out, and I want to put in my order because it seems like the market is moving. It's quite strange. All right, so let's go here. Excuse me. So we have a naked point of control. Yeah, that's not what I'm looking at. So it's not showing it here. But for this clump, the naked point of control is actually 2780 approximately. We also have this monthly level of 2274. So I want to start buying in off of the idea that there's a swing failure pattern. So that means that we're going to take out this low, right? So we're going to break below 2300. We're going to hit somewhere between 2380, 2274, and 2250, somewhere in this area, right? And find support and then move up a bit, right? So what we're saying is that we're in the bottom of a range, and that now the most likely scenario is that we find support around here and move up. Again, doesn't have to happen, but to me, that's still the most likely scenario, right? I can't look at this structure and say, yeah, for sure we're breaking below 2200. We're not, right? We're gonna have stop losses in place. We're gonna have buy orders in place. We're gonna look at the more bearish scenario. But I still think there's good reason to think that we might get a swing failure. We're going to hit this this naked point of control, and which is a weekly point of control, and the bottom of this range. We got good support here before, right? Oops, sorry. And in this area before, 2 times now, we ended up getting about a 40% move from this area. So if we can get in on a trade, and let's say it does go all the way to the top, we could be looking at a 40-50% move. That's pretty significant. That's a big trade, right? So yeah, so that's pretty cool. All right, so let's take a look here. I'm going to be putting in my trade just because I want to make sure that I have it in here. All right, and again, I'm not telling you what to do, but I know what I want to do because I've been looking at this for a little while. We've been talking about it. So, matter of fact, let's go to, I'm going to show you the trading buddy. Let's do this again, okay? Because we did our trading partner, trading buddy, the trading partner. All right, just a moment. I'll pull it up and then I'll share my screen, and you can see what we're looking at. And we can do a paper trade again or something. All right, so you can see my screen here in just a second. And share screen. Okay, so you should be seeing the screen now. So this is our trading partner. Okay, and yeah, so we lost this trade. So no good, right? No good. All right. So now we lost $10, 980. Oh, sorry, 990. Right, because that was our thing. So we're able to do a trade now for $9.90, and we're going to see how this goes. So let's map it out. We're going to put in our levels. We're looking first and foremost, I want to get in, and I think I'm going to take the trade at 3,300. So let's just put in 3,300. Sorry, what did I say? 2,300. 2,300. Okay. 2,300. We'll get rid of these values because they're going to change. Also, we want to hit this monthly level, 2273. So 2273, we're going to hit. We want 2250, which is the, I'm going to do 2256, okay, which is the naked point of control, right? And at what point are we wrong? Where would we be wrong? I'm going to measure 1% down from below 1%. Hold on. How does that go? Let's look at some other levels real quick. Weekly. Okay. Daily. Monthly. Got the monthly on there. I apologize for that. I still got this weird cough I haven't gotten over. All right, let's look at the weekly and let's run a couple things. So Pitchfork, by the way, we've got this Pitchfork. Okay, so if we came down, yeah, that looks pretty good. Okay, so we've got this fan here. Yeah, see, like, and we also had this 618, which we hadn't really talked about, but for sure, like, we hit this at like 2466 and like no reaction whatsoever. The 618 on the speed fan, no reaction whatsoever. That is just crazy to me. Okay, so we've got that. Again, it's okay, right? It's bound to happen, these types of things, but definitely thought, yeah, the value areas. Okay, let's take a look here. The point of control for this is 1800. And then we have a low volume node. So I'm going to hide our stop loss right below. I'm going to put our stop loss at like 1948. Okay. 1948. Let's see if this is a good trade. Let's see if we can even take this trade. Okay. And then our take profit, our first take profit, let's put on our old things here. So if we get bought in here, first take profit would be 2,800. So 2,800, we put in that. And then second take profit, I would want to be about 32.55. Keep it the same. 32.55. All right. So position size we're able to take on this is $58.74. And so we're going to divide that by 3. So we're looking at $19.58, right? Just going off of this, what we're doing is we're pretending that we have $1,000 trading balance. We lost that last trade, so we lost $10, which is 1%. So now this is what we have. So now we're going to go into our next trade. So 1958 per trade. Keep in mind, this is like paper trading, right? So if we take this, we have our stop loss where we want it. A lot of good reasons to have a stop loss here, right? We are at a 4.19 ratio, so 1 to 4. So if we lose, we're going to lose $9.90. If we win, we'll win more than 4 times that amount. Okay, so that's more than our point, than our 3 times. So it's green. We're good to take that. Okay, so our potential profit would be like $41.47, which would bring our total balance. So 990 plus 41.47. Okay, so we would now be ahead. We'd be up like $31. So anyway, that's where we would be. So I think this is good. Why are we looking at this? Let's look at pivots. Let's go to the 4-hour chart and let's take a look at pivots. Sorry, zoomed in. And I'm gonna move this out. Actually, let's do this too. Let's close these old channels. We want to kind of just keep it nice and light. I mean, that is just crazy. I'm still like, wow, like to get no reaction at all. Okay, so we're actually at a pivot right now. And then if we were to move lower, the pivot would be 21.77. So a little bit lower than what we're thinking of. If we lose this pivot, but this very well could be a good place to get some support. Okay. And it may not happen today, but we'll see. Low volume. I mean, there's a lot of reasons to think that this right here, I would love to get a swing failure. It would be a quick little move down. We would get a bunch of liquidations. Would we hit 2166? And how much of a difference is that? We're talking about, let's see. So we're talking about 2250. So it's about 3 to 4%. So what I'm wondering is how close to that third pivot do we want to get? These pivots have been pretty good recently. This is and pivots are one of the few indicators that I will trade, just kind of not by themselves, but I put a lot of weight into pivots. You can see just even on this chart how well they've responded. You know, like we came down, it gave us support, gave us resistance, gave us support down here. Yeah, they're pretty cool. So an extra 3%. Okay, so here's what I'm thinking. I'm thinking we got a lot of, oh, sorry, you're not even seeing that. Let me do this. Let me change my screen share. So that you can see what I see. So window. All right, you should see what I see. We've got our pivots. It's been holding pretty well. Maybe we get a bounce out of here and we're moving up. I don't know. We'll see about that. It would be that'd be a little unfortunate considering that we got stopped at just like $50 higher than where we are right now. Not even, like $30. But it doesn't look very strong to me. Looks like a weak bottom. I think we still go lower. I think we take this out. So here's what I'm looking at. I want to put in, so 2,300, which is basically, what is this low? This low is $2,380. So I want to move this to 2,301. Almost wonder if we want like 4 positions. That's what I'm wondering. Because what would be, so our average entry would be 2276. So 2276 if we got bought in here, and potentially could go, I mean, it would be pretty unlikely, but maybe 3 to 5% lower from the buy-in. So do we want to spread these out a little bit? Maybe. Or add a fourth. I think I want to add a fourth. Just because the market's so unpredictable. I think I want to go 2206 and 50 cents. I'm going to front run this a bit. So 2206 and 50 cents. And now what we're going to do is we're going to take our total. So we're good. All right, so we can do 61.99. So 61.99 divided by 4. That's what we're changing these to. So 15.49. So 15.49. If you hold list token, you'll actually have access to this calculator, and we're going to build this into a cool app, so you'll be able to see this and use it. But basically at this point, all right, we could have 4 entries, $15.49, where we're still good on the risk. We're not going more than 1% of our total portfolio. If we lose and we're stopped out, if we move up, we're gonna win. It's gonna be 4.5 to 1. That's the risk ratio. So it's a good ratio, and we're pretty well covered. We're pretty well covered. Now our stop loss, would be, where do we have our stop loss? 1948. So let's put that. So 1948, it would be down here. This would be our stop loss. Let me just change this. Okay, so that'll be our stop loss. It's not bad. It's not bad, because there's other things that we want to factor in as well. I'm just wondering how big. Anyway, sorry. Let me kind of scoot way back out. And the last thing I want to do is I want to pull the golden pocket. I want to pull this here and see where we're at. Okay, so the golden pocket starts at $2,001.65 and ends at 1714. So here's the dilemma that I'm having here. I think I want to play this tight. But here's the thing. So if we come down, we actually get stopped out in here. We get stopped out here. Then it could reverse like right here. It could reverse at 1809. Now the thing is do we want to have a stop loss of 20%? And what does that even do? Like let's put 1800 as our stop loss. What would we even be able to do? We'd be able to put 38 bucks on it. 38.81. Let's divide that by 4. Let's just see. Let's just for shits and giggles, right? 9.7, 9.7. We're just doing equal buy-ins all the way down here. Risk versus reward, 2.87. So it's a bad trade. It's a bad trade to have the stop loss down there. You know what I mean? So, because if we win, we'd only win 2.87 to 1. So it's a bad trade. Even though we got a stop loss, it makes it so it's really unlikely that we would lose. We can still lose it. So for me, not going to happen. Just a moment here. Just a second. Okay. Sorry, I don't have any music to put on, but I need like a 3-minute break. I gotta go take care of something real quick, and then we'll get back to it. So just a moment, I'll be right back. thanks. I think we're good to go. All right, unmuted, thanks. All right, sorry about that. How did I get that taken care of? So, okay. So basically, this is what we're trading. There's two ideas, and the dilemma for me is that these two ideas are both really, really good. They're also really close to each other. And I think just have to bite the bullet and do I don't know, like almost two trades. Which it might be a good idea to have two accounts, by the way. Like I've got multiple accounts, so you can have two trades going. But here's the two ideas. Let me clean this up a little bit, and then I want to explain the two ideas. We are either, so the two most likely scenarios is that we're in a range, like we're in a consolidation range, and like basically we're between 2300 and 3400. Okay, that's this range, and we're just going up and down, kind of ping ponging between them. And we've broken the low, we've broken the high, but generally speaking, that's kind of the range. I mean, we've gone as high as 35.50 basically, and as low as 21.55. So that's one idea. And if that's the case, then we've got a good setup because we're at the bottom of the range. We've got a swing failure pattern. We've got weekly points of control that haven't been tested. There's a lot of reasons to think that what we have down here could be the bottom. And then just under it, this is the challenging part, right? Just under it, about 10% lower, not even that, really, we get into this range about 7% below this range, is the global, meaning like from the life of this chart, right? This is the low on this chart. From the low to the high, we have our golden channel retracement, our Fibonacci retracement, which every time we've hit, we move to an all-time high, and we have the entire chart's point of control at about, let me see here. This is approximately $1,802, somewhere in there. Hold on, let me get a more precise tool. Why is this important? Yeah, so like 1822, something like that. Because this is important because going back since January of 2019, where this chart, started, the $1,822 is where the most volume has ever been traded. So it's a massive level, both for selling and buying. So yeah, there's a lot of money that's been traded here at this level, and then we have the bottom of the channel about 1,700. So in like on its own, between 1,700 and 2,000 is a absolutely monster buy zone. And the thing that I don't necessarily want to do, that I'm having a hard time with, is like I want to buy in on the swing failure and the bottom of the range idea. I don't necessarily think that we're going to get down below 2,000 as of right now. Thing is, we're just above it, and it doesn't make sense. Like our calculator won't let us put in a trade to buy both, right? So I think we need to play it, and we need to watch it, and we need to see what happens. So basically what I'm going to do is this. I'm going to trade both. I'm going to trade the first one, and then I'm going to trade the second one. I'm hoping, yeah, so basically here's the trading partner. I'm going to get rid of this fourth. No. I like this buy. Oh yeah, we're going to move this up. So 19, where do we say it was? 1948. I'm going to put in 4 buys. I'm going to put in 4 buys. I'm going to have my long at 19.48. Let's just see here. So even if we only get 3 of these to buy in, we're still at 3. So that's good. We have to hit at least 3 of our buy-ins to keep this risk to reward up, because we need to be at least 1 to 3. We can also mark it in and do some other stuff like that, but yeah, we have to get enough money on the trade for it to be worthwhile as well. So I'm thinking we're going to add 4 buy-ins at 23.01, 22.73, 22.56, and 22.06. So a range of approximately $100, like $95, and we're going to have 4 buy-ins. We should be able to hit that, hopefully, and then we're going to have a stop loss at 19.48. And again, I'm not telling you what to do. This is not financial advice or anything like that. I'm telling you how I would be looking at the market, because I think right now, I mean, because what are our options? Are we going to short it? I'm not shorting Ethereum when it's sitting below 2,500. I mean, it's at $2,380. Would I be taking out a short here? No. If I was taking out a short, I'd be looking up higher. And so let me show you. This is a common technique that's taught, and I think it's horrible. I think it's absolutely horrible. Okay. So let's get rid of a few things here. Okay. So someone might identify a range, and they would say, okay, so we're in this range and we're in this range. Okay. And so what you want to do is you would want to wait for this to come down, break this level, and come up and test this. And this is where you would want to take out a short, right? Because if it moves down, right, you're good to go. Okay. This is often taught and for me, this is the absolute worst idea. Absolute worst idea. You couldn't take a short at a lower point. If you're taking a short at the bottom of a range and waiting for it to break the range, come back and hit it and test it, you're quote unquote testing it, right? And then you're going to short it from there. That's a terrible idea, right? It's not a bad practice to wait for the retest, but what it does is it should inform the trade you're already in. So what I'm meaning is, if you took a short at the top of the range, right, and then you see it come down and it breaks this level, right? First off, you've taken profit here. You're going to have a take profit here, right? But as it comes up and does a test and then maybe comes back down, maybe you move your stop loss, maybe you move another take profit level, right? But you're already in the trade, right? You're already in the trade. You don't start your trade down here. That's horrible. That's a terrible idea, right? So for me, I don't have a short. So looking at a short, here are my options. I don't take a trade, or I take a long. Those are my 2 options. I don't have a short, right? So what I want to do is I want to be buying in towards the bottom of this range, right? And then obviously have my stop loss, down here. And then I want to be taking profit somewhere in the middle. I want to be taking profit somewhere in the top. And then I want to see if we come above and back test and then move up, right? I'm going to leave my long open. If we move up and back test and consolidate and then move back down, I'm probably closing out my long, right? I mean, we'll see, right? I mean, I wouldn't necessarily do that, but I might move my stop loss and I might be more aggressive. So I want to trade this range. These ranges are so profitable. I mean, if we're able to trade this effectively, we're potentially looking at a 40 to 50. This current measurement is saying 57.5% range. So just by buying spot, if you were able to buy the bottom of this range and then trade it just to the top of the range on spot, no leverage or anything, excuse me, you would be about a 50% trade. That's huge. That's an absolutely massive range. And also the price movement is so aggressive downwards. There's not a lot of support, not a lot of negotiation. we absolutely could be finding support in this area. You know what I mean? And reversing and testing all this out. We have about 25% that we have to go back and test as far as single print candles, just from where we are. So 25% is a good trade. Even just to, buy in now and trade up there. But that's not what we want to do. So what we want to do is we really want to see if we can capture the bottom of this range. We're going to have our stop loss about here. And we're just going to see what happens. If we break below this range, I think I might call the trade early and move into a position to start buying under 2,000, right? And then I'm going to have my stop loss under, like maybe 1,700, because from that point we've got the entire global channel, right? The global retracement. We have the point of control for like the last 3 years. Massive levels. Big levels of support, monthly levels at like 1,700. I mean, there's so many reasons to be buying in this area that it's kind of hard to pick where you want to start. But I think I'm going to start at 2,300 and go for a trade, cut it tight, and then if that doesn't work out, get in at around 2,000. And here's what I want to show you. So we lost that last trade, but if we get into this trade and we win, it's going to be 4 to 1, actually 4.5 to 1, right? For this trade, if we're able to win that one, that makes up for the loss that we had, and then we grew our money by 3x. I mean, as far as like what we lost, right? So we lost like $10, whatever, on our paper trade, but we would then grow it. We would make up the money and then grow it. So we only need 3 out of 10 trades to go our way to remain successful, because we're very disciplined when it comes to the risk management. So yeah, anyway, I'm going to be putting that in. Those are my levels. I think right now there's a lot of reason to think that we are damn near this bottom. It would really suck if what we're at right now is the bottom, because we got stopped at 2,400. But to come that low, 23.42, just makes me think we're not done yet. Like, we're just not done yet. I don't think that there's enough. Like, it's interesting to me because 23.42 I don't think is necessarily shit. I mean, it could be a good level. Let's see. We've got that daily that's almost a weekly, that 23.23 right here. It's a good level. It is a good level. We've got a lot of play off of that before. So, but we had to take the trade the way that we did. So you can't look back. I don't like losing. I'm a very competitive person. I think that this is a really like a sport, right? So risk management and everything that helps, but still not fun to take an L. So especially if we move from here, I'd be pissed, be absolutely pissed. All right, so that's all I have for you right now. Again, it's about risk management. It's about the psychology. I've been asked, well, why are you're only looking at bullish scenarios? Again, because that's the only trade available to me. I can't take out a short this low at the bottom of the range, with all of these reasons to buy. I mean, from realistically, let me just get a measurement here. From like this to here, we've got about a 26, the next 26% down from the bottom of this candle, gives us probably the biggest levels that we've faced in a long time for a long. How am I going to short into that? I can't take a short into those levels. I mean, the global level for the Fibonacci retracement on that 618, I'm going to short into that level from like 20% higher. No way. Absolutely not. Not to mention we're in a sideways consolidation range. I'm going to short into that. Absolutely not. There's no way. So it's just there aren't any shorts to take. There's just not. Yeah, really surprising. Really surprising, but this is what it's so fun. I mean, this is what's up, big Mr. Big Country? How's it going, buddy? Yeah, nice to see you on the stream here. But I'm just wondering, here's the other idea. Is like, is this a better representation of the bottom of the range? I don't think so. I mean, we got wicked, we got wicked, and then we came down and touched that, and it's offered some support. I would really hate if that was the case, but I don't think so. So I am going to be looking a little bit lower. I'm going to be looking for a swing failure. I think that makes the most sense. Why? Because big money has to wreck the other traders. Now I'm sure were a lot of liquidations that happened in this spot, but we didn't see a reaction from it, right? So there's probably some good liquidations here. Really got to watch this closely. Really got to watch this closely and see how the market is. All right, so let's say we don't get it. Let's say we're putting in a bottom, and this will be the last thing here, and then we'll close down this stream. Let's say that this green line is our bottom, that this is the support that we're needing, and we're only up from here. Where might we enter into a trade? Okay, we gotta watch and see. Here I'm gonna give, so fish stick 420. You can come on when you get the mic. You can take it. What's up, fish stick? Go ahead.
Well, I'm just seeing what you guys are talking about. What's this list thing?
Yeah, so list is our currency. So list is a charting platform. We're about ready to release this charting platform, and it's not just market information like charts and candles. It's also security information. So part of what we're doing with creating charts is also we spend some time each morning going through and reading charts and doing some technical analysis. So yeah, have you seen us around before? Or is this your first time coming to CryptoList?
So are you doing something like CVC but more community driven? Is that what you're trying to say?
So yeah, so CVC, right? That's probably a good equivalent. We launched before CVC. We're actually taking, I mean, no shade, right? But what we're trying to do, what we are doing, is building an infrastructure underneath so that we can actually provide the data feeds to other wallets, such as like Coinbase and MetaMask and things like that rely on CoinMarketCap. We're going after CoinMarketCap's main source. Yeah.
So we were just talking about this earlier this morning. This is weird how you pop. I'm in a room basically where you're doing exactly what we were talking about. So like, are you going to have like a community DAO of some sort to operate on your platform in order to make sure any coins that are coming through aren't fraudulent or?
So what we have is we have tech that scans the contracts, and then we verify some certain like information. So it's not based on a DAO. It's based upon the tech that actually will look at the contract and say, is it a honeypot? What are the taxes? We'll outline if a team is doxed or KYC'd, if there's a multi-sig wallet that's in place, token distribution, liquidity lock, a lot of this security information. So it's not based upon a DAO.
I worry about that way and not having a DAO. And I think having a DAO on every single platform should be essential to a decentralized ecosystem and moving forward in crypto. But that's just my opinion, because there's easy ways to manipulate the market by having just a single entity or just a little group of people determining those things.
So I don't disagree with you. And here's the future plans is that we're going to turn these listings into like a wiki, right? So the community will be able to add information, will be able to really be in control of the listing, unlike, CoinMarketCap where they own the listing, right? We want the community to own the listing. The problem is when it comes to a DAO, I mean, it's not necessarily a problem, but we do want to rely on the tech, because I don't believe. I mean,
you'd still use the tech.
Yeah.
So the DAO, you'd use the tech. You'd have like a grace period where your DAO would use the tech's info, and then you'd analyze it as a community, and then the community would actually say yes, no.
Yeah. Basically. Yeah. So I think that we are engaging with the communities. We have a like a chat function. Also, like I said, the wiki function that the community will be able to update information. We'll be able to add valuable information, and we'll have like a discussion section for each of these. It's not necessarily a vote, right? I know that there's some projects that are trying to say that the community has to vote on something in order for it to be listed. And what we want to do is we want to give everybody that opportunity to be listed, but have the tech and have the community provide enough information so that people can be able to do their own research right then and there and see if it's something they want to get into.
Yeah, I get that too. Roll it out, give them a chance, and go from there, basically, is what you're saying.
Yeah. I mean, and the thing is I know for me, I definitely don't want to make that call, because as far as, the community would be great to be able to make a call, but when it comes to, the tech definitely has to be there. And when it comes to like one body saying, oh yeah, this is a winner, this is a loser, I've passed on coins that I wish I wouldn't have, right? And I've bought coins that I wish I wouldn't have as well. So that's where we just want to let DeFi be DeFi, allow people to vet it and have good information. And then through community discussion, as well as, the tools to analyze it, people can hopefully have more success trading. But yeah, I appreciate that. Please check out our website. It's cryptolist.com. List spelled like how it is in the name, LYST. Oh, fish got dropped down. Go ahead, blue collar.
Hey, how's it going, man? I was just in here listening a little bit. Some good advice. I was wondering, is that your play of the day, or is that something you're kind of set those values and hope that it takes place in the next 24 to 48 hours?
So as far as buying Ethereum at this level, looking at maybe the swing failure, this is kind of my big you might call it like a swing trade, right? Range trade. So it would go for several days, if not a couple weeks, probably. But yeah, this is and again, I'm not financial advice. Matter of fact, we lost our last trade. But this is where.
That's what I was going to ask you. I was like, well, how many of those trades executed? As I'm looking at the chart, so yeah.
Yes.
Let's brought that up.
Yeah, so this is the thing. I wanted to do something, and it's good to see when a trade doesn't go your way, right? We had a lot of reasons, and we've been talking about this for weeks, that this would be a great level, to find some support. And frankly, we just didn't, right? But this is why we take trades that give us a certain risk to reward ratio, and then also we don't trade more than 1% of our total portfolio. And so both together gives us a 3 out of 10. We only need to win 3 out of 10 trades in order to be profitable. So this was a good example of when we had, a good trade and we just didn't get it. So the next opportunity, as I was looking here, is going to be about where we are, maybe a little bit lower. And the idea it's not that I'm a perma bull or that I would be a perma bear even. It's just we're at the bottom of the range. There's so many reasons and levels of support to take along that the idea to take a short at this level, to be this low and then to short the market, it's really not a trade, right? So it's not that I only look for longs, but right here, those are really the only opportunities that we have available to us.
Oh, it's fantastic, and I think you worded that properly, and that's the thing is, you're looking at the market sentiments. You're putting a position in that has shown some intelligent perspective to what may or may not happen, and you tried your best to minimize risk tolerance. That's all good information.
Yeah. Well, I appreciate it. This is what it is with a proper edge, strict adherence to these rules and risk management really is what we're talking about. Over enough amount, over a maybe 10 trades, 100 trades, what you're able to show is profit. And so this is where it's you don't have to win every single trade. You definitely don't, and you definitely will not, right? The market is an amazing thing. Technical analysis, we've seen it time after time on our stream. How technical analysis is spot on. We've called levels within $2.85, and it's been amazing. And then other times, you think it really, really should hold up, and it just doesn't, right? So yeah, it's every trade we take, we know we can lose, and that's why we have to be very disciplined in our approach to risk management.
Yeah, I have something, a very similar, I don't necessarily call it a personality flaw, but I feel as you do. I'm very competitive, even more competitive with myself. And I always try to fine tune it. It's hard to develop the mindset where every single point matters. Because you have to recognize the law of averages is the greater good, especially if you're a long-term investor versus somebody that's going to play around a little bit. The law of averages is your friend.
I 100% agree with you. I love it, and yes, competition is great. This is like a sport to me, but it is hard, right? And I think it's easy to say. I mean, realistically, okay, there are studies that show this. You can flip a coin, and a coin, because it's 50-50, it's about 50% accurate, right? So you could theoretically flip a coin, and with proper risk management, you only need 3 out of 10 to win. You could be profitable. The thing is, and why people can't do this is because managing your emotions it's so much harder than just, okay, this is where I buy in, this is where I sell. Like right now, I probably have to step away. I probably have to set my levels and step away because I can sense in myself I've got FOMO, right? I just got stopped out at 2400, which was to me an invalidation earlier, but now I'm like, well, what if it does go up from here, right? And so it's like, no, I can't think that way. This is where you really have to step away.
Do that, my friend. I mean, this is not financial advice, but that was a good value range. We're at a good enough time to set it and forget it. There's not enough indicators to show a giant correction amongst the market. I mean, you're always going to see individual trade isolated in specific assets. Kind of like Shiba yesterday when I had a small little run as everything else was falling. But there was a different reason for why that took place. Like you said, that's another topic, another discussion for another time. But yet again, at the end of it all, yeah, it's there's ways to minimize your risk, reset your emotions. Math is your best friend. Math doesn't lie. If it did lie, banks wouldn't be using it. And you know what I mean? And use your tools, resources, and knowledge to make the best possible trade and predict the position that's just going to benefit you as an individual and your portfolio.
I appreciate that, and I agree 100%. So yeah, thank you for your perspective and also encouragement. I take this as encouragement because yeah, It is. It's a really good value area, like you identified. We're in a very good spot. Someone asked earlier on the stream, would this be a good place to convert Ethereum to stable coins? And for me, it's kind of almost the other way around. It's like if I was holding a bunch of stable coins, I would be converting them back to Ethereum around here. Again, not financial advice or anything like that. You got to trade how you think. But no, this is such a good. It's such a good value area. There's a lot of reasons to think that in the next little while, whether where we're currently at, or if we have to break below and get below 2,000, there's a lot of support, a lot of reasons to be buying. So the thing that I got to do is I looked at Bitcoin earlier, and I didn't realize that Bitcoin was bleeding a lot heavier than Ethereum. So on the Ethereum chart, we still have two major lows that we have to take. We haven't taken out the yearly low yet, but Bitcoin has. Today it took out the yearly low. So it's much lower relative to where Ethereum is. And yeah, it'd be really interesting to see where that's going. So I'll probably spend some time charting that out.
I personally love it because you hear a lot of people, it puts you in the shade of gray, right? That's sort of safe zone, like you say, flipping that coin, 50 percentile. But I love it when people think that it is absolutely crypto doctrine that Bitcoin dictates the market. And I'm not saying that it doesn't, but days like this and moments like now, that's the 50 percentile coin flip when you're wrong, and it's kind of, I don't know. I think how we view crypto and how it functions and its purpose really needs to go through reevaluation. The stock market mindset got us this far, but we have to recognize there's a difference between a crypto mindset and a stock market mindset. Different tools, different psychology of the investor, different target audience, different utilities. So in my opinion, this is when we all claim to be pioneers and we're living history. Those that teach now will be those that are rebranding the structure of crypto investment in the future. And that's just my opinion.
I agree. And I'll take this as if we're talking about rebranding or restructuring crypto, my big thing, we got to get people taking payment in crypto. It's fun to trade. It's volatile. It's great. I love it. Within the ecosystem that we're in, as I'm the head of Crypto List and I run that project. We use Ethereum for payment for a lot of things, but I would love to see this expand. I'd love to see people take crypto as payment for common everyday goods and items. That right there is really going to bring not just stability, right? But it's going to bring real competition to what we currently have. And I think if we want DeFi to really help the masses, like I think we all do, and we all recognize it can be, that is a must-have on the list of things to complete. So, yeah, absolutely love it, man. Thank you for your perspective.
And that's the value of being an ambidextrous trader, right? Like you were saying, you can't always have a bullish sentiment. You can't always be bearish. Sometimes you have to know when to hold. It's like driving a vehicle. You don't go driving around town in first gear all day long. You have to know when to change gears. And, when that takes place, in my opinion, that's when it'll be a holder's market, where those that stake, farm, and hold will be rewarded when we get to a higher adoption level. People like me that feel as you do, I truly feel this is a sport. I mean, when you read charts, I believe you can make yourself a crypto athlete. You can be a chart reading athlete if you're continually structuring your brain, recognizing movement flow, live when it happens, and applying the knowledge you had yesterday to generate a new perspective today. And to be a crypto athlete, it's going to become a little boring when the charts become stable. But I do think that when we approach that type of mass adoption, it'll bring stability to the charts. It'll probably be better to have a holder's mentality as the transition occurs.
Agreed. Absolutely agreed. Yeah, I appreciate it. Have you been to these streams before? I feel like your name is familiar.
I haven't. I jump around the Twitter spaces. I have a different perspective. I try to find like hidden talent people that get overlooked by the community and clickiness. And I feel that that's where you can have appreciation, where you can help somebody that's a young man and silly, mature into a healthy trader. It is nice to come into rooms and have a contrast of opinions with smart individuals at your same level. But at that point, it doesn't generate organic trade within the community. What I mean by that is you kind of need a contrast of views. If all the intelligent people got together and started talking and teaching the same perspective, it wouldn't be healthy, in my opinion, for the chart. You need people trading with different perspectives, thought processes. I'm going to hold, I'm going to farm, I'm going to day trade, I'm playing the weekly, the monthly, I'm going to short. You need that. That whole combination is what gives us what we love.
Agreed again.
Yeah, I'll be Blue Collar's reference. Much love to you, Blue Collar, man. While you were helping to deploy the day stocks contract, Blue Collar was holding down the Twitter space with us. Awesome dude. I think we're in a various circle of mutual friends. Awesome to see you today, man. Your accent always relaxes me as well. I don't know what it is about it, but I love it. Yeah, and I actually missed today's lesson. I'm a bit gutted about that because it's very critical to be at today's because I need to set my value points. But maybe I should just send my stable coin to you, Cameron, and you can do it for me. It's too scary.
No, it's good, but that's cool. Okay, so Blue Collar's got a tie to Days Dogs. Yeah, we love Days Dogs over there.
Yeah, many other awesome people in the space and around Twitter.
Awesome. Yeah, fantastic. Well, very cool. And how are you doing today, Oryx? And also, I see Uber joined in.
Yeah, can I ask a question?
Yeah.
I am waiting for Ethereum to be decoupled from Bitcoin because all those major currencies have a big influence on ETH. When do you think that will happen?
Oh boy, that's a huge question. Let me take a look at something though. What I want to show is where Bitcoin is right now. Okay. If you're watching live on the YouTube, you'll be able to see it. Oh, where'd my mouse go? Hold on. Cursor.
I have to shoot out for a bit, but if it's still open, I'll jump back on when I'm home.
Okay. Yeah, appreciate it. Thanks for coming in. Thanks, buddy. All right, so let's see. Now, do you anticipate, Uber, a complete decoupling?
I hope so. Just like Bitcoin needs to decouple from the S&P and the Nasdaq.
See, that's where I'm not so sure that we're going to get a complete decoupling. I mean, even gold and silver trend together, but right now, so here's Bitcoin. Bitcoin went down the low, $32,060.95. So this is Bitstamp, right? We've had these levels. Yeah, these are pretty interesting levels. But here, let me delete some of this so it looks nicer. But yeah, the previous yearly low for Bitcoin was 34,000. Oh, no. 32,950.72. So roughly 33,000. And now we're below that by a good margin. We went basically to 32,000. So a whole $1,000 lower than the yearly low. But then it's very different when you're looking at Ethereum. Relative to the chart, if we were to take a measurement, let's see. Oh, I guess that wouldn't be all that helpful, but yeah, Bitcoin's putting in the yearly low. I mean, so it's really interesting. If you look at the Ethereum and Bitcoin charts, they trend so closely, but this is one of the largest divergences that I've seen from Bitcoin and Ethereum, where Ethereum doesn't hold, or sorry, where Ethereum holds far better than Bitcoin. So yeah, hopefully that continues. And I don't know. Do you have a thing against Bitcoin though? Because I like Bitcoin. I think it's good.
I think Blue also wanted to add something to the conversation. I saw his hand, and then.
Oh yeah. Go ahead, Blue.
Oh yeah, I mean, I was just going to say there's a couple projects that are investing a lot of money so that that won't take place. I mean, look at the ICP. I think they have the Chromium Satoshi concept. It's going to be like a bridgeless interface between contracts. When you start seeing projects that are investing large sums of money and actually even holding off their projects because they're waiting for Ether 2 to be released so that they can make this work proper, it really does kind of provide an indicator that there's going to be more of a commingling between the two, unfortunately. I think if we can uncouple just from, hedge funds portfolios, that would be great. I remember when I was excited this time last year when they were talking about increasing portfolio percentages and access to crypto. I was kind of on the Kool-Aid thinking, all right, more money, here comes more money. But that's in my opinion, that's why we didn't see a Wall Street bailout during COVID season last year, was because they were just skimming out of the crypto world and putting it into their hands and then deciding where they want to put it, keeping Wall Street alive, basically. But that's just my perspective, my opinion. But at the end of it all, I agree with you. I would like to see that, but unfortunately, there's a lot of projects that are investing a lot of money so that won't happen in the future.
Yeah, we're still young, right? The crypto space is still really young. Maybe in 10 years from now, I don't know. No, I'm not an anti-Bitcoin. I cannot stand those spaces with the Bitcoin maxis. That's really rough on me because everything in the world sucks except Bitcoin, and I think that's a really narrow vision.
It is. Ethereum has some very, very good utility, and I think that may be why it's holding, so well. I mean, basically, if we were to match Bitcoin's chart and go as low relative to the previous lows, Ethereum would have to drop another 20% from where it's at right now. I mean, maybe 17, right, percent. So we're holding fairly well, and I think part of the reason for that is because there's so many other projects that are tied to it, and then Bitcoin doesn't necessarily have that. I mean, it has projects trying to prop it up, right, keep it from being decoupled, as that was just explained. But with Ethereum, there's a big utility attached to it.
Then another question, and that can Blue Collar can also add to that conversation. Why do you think everybody is liquidating their positions? It's that's why the price dumps, right? Because everybody is selling.
So I mean, yeah, people are selling and people taking out shorts, right? And to me, it's kind of an emotional trade. I mean, look, here's a very real element that's not necessarily emotional, and it could be the state of the economy. And with recent Fed announcements, to me, it was an admission of how weak the economy is. So that's like a non-emotional type of thing where it's like, you really need money and you see it going down. I mean, obviously emotions play into it, but you see it going down, you really need money. Things are becoming tighter. Gas is up, inflation is up. And I could see that factoring into why people would have to sell. Sometimes you just have to sell. You just have to get out of a trade. So that very well could be part of it. But as far as trading this, there is no short for me. There is no selling this position at this price. It's really hard to justify that. These are very good opportunities to be purchasing, in my opinion. I would love to see if Blue, do you have any comments on people liquidating their positions?
I think a lot of it is, and this isn't proper terminology, it's just kind of my own little concept. They're trying to shake people out. That's all. It's they have the ability to go in and out with pinpoint accuracy. At least those that control the market. Yeah, there's a little bit of sales that take place in the world of the wallets, but on the bigger exchanges, the different pools, that's where you see orders of 200, 300, 500, ether take place, and that's what on the buy side and sell side. And those people with those abilities, they really do have a proper system, and very much so professional level. A complete team of educated individuals tied into AI systems and algorithms. Those guys are my heroes. I watch them all day long. On the bottom side, everybody kind of looks at, more or less looks at wallets and sees movement. I personally consider that yesterday's news, meaning that you guys are seeing things after they happened. And I like to pay attention to what takes place before it happens. That gives me insight.
I like that too. Yeah.
Did Vitalik dump his bag?
Yeah. Yeah. So I mean, taking a look at Ethereum, it looks really, really weak. Right now, we've been actually trending down a little bit. We're currently, at least on the chart that I'm looking at, which is the Ethereum USD pair perpetual contract on Bybit. We're at 2360, which is quite low, and it doesn't give me a lot of confidence that we're going to be finding a bottom right here. I think that we're moving lower. As far as like a ABC Elliott wave count, it would be a lower low from like below 2155. So the possibility or the probability of us going and hitting, maybe 1800 or just above, I think it's pretty substantial. There's some big levels there. It would drive a lot of buys, and as far as taking a look at the point of control, meaning the position or the point where most volume has been traded, if we go back a couple years, the price point of like $1,812 more or less, right? This is where the most volume has been traded, highs and lows. So, and that just happens to line up almost perfectly with a monthly level, which is right where Ethereum was, like when we last year. So I'm talking about like May, June, July, where we had 3 bottoms where we came down. We're in this massive consolidation, and then we pumped up to an all-time high again. There's some massive support right around that same type of price point, about $1,800, a little bit lower, like $1,750, but still it's a range. There's a lot of reason to think that we could get some pretty great price action in this area. So yeah, it's interesting. I think that we're probably moving lower. The question is do we stop at 2200 or 2150, somewhere in there, or do we actually break below 2000? The thing is, the difficult part for me, and I'd love insight, I'd love some perspective if anyone wants to share it. It's that these two really good trade opportunities are stacked so closely together that it's like I want to take the bottom of this range trade, but at the same time, the probability that we're going 1800 is pretty good, considering the price movement.
I want to pay attention right now because here comes an opportunity to clip that first pre-order set that you have. So right now is a nice little positive movement to achieve your goals earlier this afternoon.
Yeah, could you elaborate on that a little bit more?
I just never stop looking at the charts, and I'm looking at them live.
Mm-hmm.
And right now we're about to see down movement in both assets that you're referring to.
Yeah.
But you're going to achieve your first buy position here in about 10 minutes or so.
I think you're right. Yeah, we're about to put in a new low. We are just dumping.
I got the cycles down to minutes, man. I know when I can go take a snack and come back.
Matter of fact, here let's put this in. Do you ever do Fibonacci time?
I do not, my friend. You know, I will have to come out and admit and say that my formal education is zero. Everything that I know from crypto has been self-taught and self-observed. I haven't watched one video or listened to any type of seminar. Even when I came here to Twitter, my knowledge was already sound, and I was more or less trying to search to see if others trade the way that I do.
Wow.
Because I thought that if I could find this on my own and recognize how charts move, that there has to be somebody else that does it better. And so that was the whole reason for coming here. And then I ended up, bumping into the degens and having fun and laughing, because there's a value in laughing in a bull market, right? You have to be able to laugh,
Yep.
shake it off a little bit. And then I just kind of played in their world and tried to selectively fill gaps for them to help them become better traders and possibly, hopefully, better their life position. And find when teach them when it's time to be silly and when it's time to be serious. And at the end of the day, I really haven't been able to bump into anybody that trades like I do, or at least movement as it happens and how it happens. It's tough. Like you say, being at constant competition with yourself. Those that I have watched predict, they're almost as good as that coin flipping scenario that you referred to, and 50-50, to where I feel as if I make one bad call that I failed, that my voice no longer has value. Well, I mean that's the standard I hold myself to, so it's really tough. And you'll have an individual make a prediction that just completely goes south, and then 2 days later they're back on, they're talking, and everybody just doesn't really hold their hands to the flame. And so my understanding of what's industry standard, and what's acceptable, not acceptable, and the growth and movement of the charts, that's just something that I completely discovered myself. But it took about 8,000 chart hours in a year.
Yeah.
20 to 22 hours a day. There was times where I was up for 48 hours straight, and my minimum requirement for judgment is 12 to 24 charts on live, and it's got to be a live feed. So I do see it as a sport, just like it's I love it. It's the best adult video game on earth.
You and I are very similar, and I can appreciate that. I like that a lot. I like that perspective, and I agree. What I find amazing, if I can just kind of geek out on this, it shouldn't work. When you're looking at technical analysis, you're looking at stuff. In a way, it's just people trading, looking at data differently, having different perspectives, having different life events happen, and all sorts of different motives, and some people are inherently more optimistic, and other people are inherently more pessimistic. It's just so much, and yet technical analysis and understanding charts, it works so well, so often, that it kind of blows my mind. It's this absolutely like should be meaningless, but spontaneous cooperation, and it works really, really well. But as far as the Fibonacci time, so there's this is just another indicator. It's just another point to find groups of investors. That's all. That's what I continue to harp on, is that these indicators are not in themselves, they don't have any power. Just because there's a line on the chart doesn't give it power. What it is there's likely someone else looking at that same line, right? And so if you can find a couple reasons, or a couple lines, a couple groups, indicators, whatever it is, that that means that there's other groups of investors that are going to be trading with you, right? And it might be enough to turn the market. It might be enough, especially if there's a big money that's kind of sitting there and sees the same thing, and they want to trade that as well. Then we can all trade together with the market. And the Fibonacci time, if we look at the yearly low and the yearly high, it actually gives us a time print let me just adjust this real quick because I want to make sure we're dead on. So we are, okay, so if you're watching on YouTube, it gives us a, like, so May 15th to May 19th, it gives us this, this range. And typically when we approach these ranges, and honestly, they're not super precise in that it has to happen within that range. It could be a day ahead, could be a couple days after, whatever it is, but it's a pretty good range for understanding a transition or a change in the market structure. So we're approaching this pretty significant timetable. So it would be interesting to see what happens in the next 5 days. 5 days seems a little too long for me, but if we consolidate, I guess the scenario would be maybe we consolidate around here for a little bit, and then we have like a quick jump down, quick little liquidation, bump and run, and then we maybe move to the top of the range. So this is one of the big reasons why I'm not just waiting to see if we go to 1800. I think that it's pretty likely that we are just trading a sideways range. Even last year, we were right above this global retracement, Fibonacci retracement, like the 618, and it was thought to be definitely going to be hit, right? And we headed that direction. It looked very aggressive, and sure enough, we just moved. We didn't actually get that level. We moved right before we got there, and I think that that's, again, people getting wrecked because they're holding their shorts longer. They're waiting for this absolute level that's a monster and it has to be hit. And big money comes in and says, yeah, thank you, I appreciate that. We gotta wreck you, fill our position, and now we're on our way up. And sure enough, we went to an all-time high. So, but anyway, yeah.
Yeah, it's tough, man. I mean, I found a way to take the sport out of it completely. But I can only do it to assets that my brain can process the data fast enough. Some volume and flow just moves too quick to really do it with the human eye. And it sucks because when I discovered it, I was like, wow, I put all this chart time in, all these hours, all of this obsessive, compulsive, madman, studying as if I'm Rain Man counting toothpicks on the ground. And all I have to do is this. And it broke my heart, my friend. It broke my heart. And I'm not going to throw it out there because I don't want to kill our craft and our trade. And it's not easy to do with, Bitcoin and Ether. I could do it with Shiba all day long. I could do it with any asset that moves at that speed just with my eyes, and where, the charts don't even matter anymore. But I agree with you. It's not about, I've never drawn a line on the chart ever. From my process of having no investment knowledge to only developing a crypto mindset. And that's why I feel like it's a true crypto mindset. It's not perverted. And I don't mean to use that word as if other tools and measurement skills are dirty, but it's my own perception of crypto. I reverse engineered it. I took the engine, I disassembled it, I put it back together with no instructions. And for me, the proof is in the pudding. Look at the charts and look what I told you 15 minutes ago.
Yeah. No, that's amazing. I hope to continue to have conversations with you. Love to understand your perspective. And it's fun to be with people that are trading and doing this and have different ways of looking at it. And this is exactly what we're talking about. You and I may agree to some extent on it's going lower, right? But we're coming to the conclusion, maybe because of different tools, different measurements, or different processes, where we find what you might identify as the low might be different from me. And it's amazing. It's the whole world, well, maybe not the whole world, but it's millions of people coming in independently and just negotiating these prices. And it's really cool. It's a fun thing to be a part of, for sure. And yes, you're right. We are continuing to move lower. Ethereum currently is at 23.23, somewhere in there. And yeah, we're about ready to get our first position filled. Let's see, what do I have here? 2301. So I need about $24, and then we'll get that first position filled. Yeah, fantastic. Well, I appreciate everybody. Thanks so much. It was great talk, great chat. It's fun to go and do this. It's important to keep Ethereum, keep Bitcoin on our mind. I mean, we do a lot of DeFi trading and investing and stuff like that. But if we can understand this, for instance, if there's a project that you love, what a great opportunity to get in. You get more tokens, you get more bang for your buck, just because Ethereum is down. And if we are moving to higher levels, then it pays off even more so. We've been talking about this for a while because we've had there's been a couple levels the last month and a half that we've been looking at, hoping to find support and stuff. But yeah, what a great opportunity to be getting into DeFi and to the projects you really admire and like and believe in. So anyway, appreciate this. Appreciate everybody. And I got to get on with my day, moving and getting some other stuff built for Crypto List as we are nearing the launch of our platform. A couple things need to be squared away, adjusted, and fixed, and then we will be launching this, and that'll be very, very good for everybody. I know we're all very excited. So thanks very much, everybody. You have a great day, and thanks for spending the time.
Have a great day, Crypto List.
Appreciate it.
Thank you, guys. Thank you.
Thanks, Blue. Thanks, Uber.